Let's start your investment journey.
Hi, and welcome to another edition of our weekly market outlook report for the week starting Monday, the 8th of March. We have just left behind us a busy and volatile trading week, which started March trading activity. We have another busy week ahead of us, which starts with China trade balance for February and also Japanese GDP Q4 figures on Monday. On Tuesday, we should be on the lookout for Eurozone GDP Q4 figures. Going forward, China and US consumer price index data for February, Bank of Canada rate decision, in addition to the weekly crude oil inventories, will be closely watched on Wednesday. On Thursday, the main economic data release is reserved for yet another central bank, ECB rate decision and press conference. Also in the afternoon, we'll get US jobless claims data. The week will finish on Friday with UK GDP for January, also Eurozone and UK industrial production data, and Canada unemployment and US Michigan consumer sentiment. Now, let's take a look at few markets. Let's start with DAX or German 30. This is a daily time frame. We are seeing this sideways consolidation here carrying on. Key trading level is down here at 13,880, our 50 period moving average. As long as that level holds and we see continuation of this bias to the upside, therefore a sideways consolidation and a breakout higher. Breakout above 14,100, a daily close above that level could open the way for the retest of these current swing highs at 14,180. Breakout above that, potentially even new all-time high. Alternatively, if you see a dip lower and a loss of 13,880, that could trigger a deeper consolidation to the downside, targeting 13,800, 13,730. Wall Street Dow Jones, we saw a breakout on Friday, which was triggered by non-farm payroll numbers. 379,000 jobs created in the past month, much better than expected, and also US unemployment rate dropped to 6.2. Key trading level going forward is at 30,870. So if we see a pullback, basically breakout and a retest of this breakout for another leg higher, or if we see a gradual move higher and a breakout above these current swing highs at 30,700, that could trigger bullish continuation targeting 31,850, 32,000, possibly even higher, maybe even new all-time high. Alternatively, if we see a rejection here and a dip lower, the initial support is at 31,157. Loss of that level could open the way for a deeper controlled pullback and then retest of this rising support trend line towards 30,870, followed by 30,500 to the downside. Euro dollar appears to be bearish. This is a daily time frame. Key trading level going forward is at 1.20. Rally into 120 and a rejection or a gradual move lower and a loss of these current lows could trigger a continuation of this selling pressure, targeting 1.1850, 1.1820, 1.1780 to the downside. Alternatively, if we see pullback and a rally or a gradual move higher and a breakout above 1.20 low, that could trigger short squeeze, basically a continuation of this sideways move to the upside, targeting resistance at 1.2040, 121, possibly even 120, 170, which would be triggered by the retest of this swing high here, which triggered the last leg lower. Sterling dollar appears to be more bullish in end of day time frame. This appears to be sideways consolidation, supported by a couple of trend lines and also 50 period moving average. Key trading level for sterling dollar is at 1.38, 1.3780. If buyers return here and push the price higher, the end of day close above this kind of consolidation range here is required at 139.50. Breakout above that level targets 140, above 140 targets 141.50 and 142. Alternatively, if we see a dip lower and an end of day close below 137.50, that could trigger a deeper consolidation to the downside, retest of this additional support and cluster of these previous lows towards 137, 136.70. Dollar Japanese yen, massive breakout higher. The current price is well above rising 20, 50 and 200 period moving averages, so some profit taking is possible around these levels. Pullbacks to 107.50 and a rally would be seen as a bullish, or also a rally and a breakout above these kind of swing highs could open the way for the retest of 109, 109.50, possibly even 110 on the upside. Alternatively, if you see a pullback and an end of day close below 107.50, retest of that level from underneath as a newly found resistance, that could trigger a deeper consolidation to the downside, targeting additional support at 107, 106.80, possibly even 106.50. Lastly, let's talk about gold. Gold had another bearish week. Gold is trading very close to a psychologically important 1700. Bullish traders are due to come back and test that level. If we see a rally from here and a breakout higher, initial resistance is at 1720. Breakout above 1720 could open the way for the resistance of 1760, 1770 to the upside, which would then signify the retest of these significant swing lows. Rally and a rejection would be bearish. Rally and a breakout would be bullish, potentially opening the way for the retest of 1800, possibly even 1830, 1850. Therefore, continuation of this sideways move. Alternatively, if we see a short-term rally and a rejection, or a gradual move lower and a loss of these current lows, key trading level below 1700 is at 1680. Loss of that level could open the way for the retest of 1660, 1650, possibly even 1640 to the downside. Thank you for watching. Thank you for listening. Stay safe and happy trading. Bye for now.
Let's start your investment journey.